So maybe to kick us off, I could ask you, Chris, to maybe tell us a little bit about you and a little bit about Spark and kind of set the scene for us a little bit.
Yeah, well, absolutely. Thank you very much for having me on, Conor. It's a pleasure to be here. A bit about me. Well, I'm kind of in my 50s now. I moved over from Britain kind of 20 years ago. I think it was Easter 2000 that I came over here now. And so I've spent most of my adult life, or a good chunk of it anyway, here, and very much enjoying it. Spark has been around for just over 2 years now. We incorporated in May of 2018. And in that time, we've had some great success with kind of helping to fund early stage companies. We've had 14 companies on our platform now. We've raised almost €3 million for those companies. Many of them are HPSU companies or have EIS. They've ranged from a company looking for 50,000 through to companies who and our biggest raise to date is about 500,000. So anything and everything in between. We're very sector agnostic. We don't specifically do one particular sector. We have a massive number of investors who have signed up over that 2 year period. So we've got multiple thousands of investors who are signed up and live on our platform now as well. So in a nutshell, that's who we are and what we do and who I am. And we are in the business ready to help companies, whether they've come through the Dublin BIC or any of the other BICs for that matter, or any of the LEOs or any of the enterprise islands, or even, of course, outside of that environment as well. Happy to help fund those as well, assuming that they've got a business that is fundable and that we think our investors would like to invest in.
Superb. Thanks, Chris. Maybe just to drill a little bit down into that. So can you talk to me about, be a little bit more specific on what you're interested in? And I'm talking about the stage that the investor are at. Are you pre-seed? Are you seed? Are you still on at Series A, B? Talk a little bit about where you fit in the funding journey, I think, to kind of set the context for our guys.
Yeah, absolutely. Well, we are really pre-seed and seed. We certainly aren't at A and B levels. We'll leave that to the larger venture capitals, for example. But no, we will look at any company who are looking to raise anything probably from 100,000 to even $1 million, where we would even contemplate looking at. We have a number of partnerships kind of set up where we can help co-fund a particular round. Maybe that's with an EIS fund from some of the players in Ireland who will help fund the rest of it. But no, we would be very happy to look at anything in that particular level, in that particular range from, as I say, 100 to let's say $1 million for the moment.
Very good. And the principle of match funding, the Enterprise Ireland is one of the lead funders in the market. They have their kind of HPSU matching. You obviously, your funds go in as part of that matching. But can people come onto the platform and raise independent of that? In other words, do the full raise on your platform?
Absolutely, yeah, no, and we're very happy to do that. In fact, we have done 2 or 3 of them that have been outside of the Enterprise Island circle, if you like, and happy to do that. If we still think that company has an ability to generate interest with our investors, absolutely, why not? And so no, they don't have to be in the Enterprise Island family, if you like. Okay,
fantastic. Okay, so that's kind of for our guys. It's 100K to $1 million. Come in as part of a round. Come in by yourself. That's a really good context. Talk to me then about the process. So we're used to the VC process. We go and do the pitch. There's the kind of the following further pitches, due diligence, on into term sheets, Describe the process, if you will, of crowdfunding and how it kind of differs from the VC angel world.
Absolutely. Well, we have an application form. So first of all, we engage with the company, and if it's something that piques our interest and is still of interest to the company, there's an application form. we receive that back in, and internally we process it and go, okay, well, yeah, this still sounds very good. Or we like this idea, and we will then kind of explore that a bit more with an interview, not an interview, a meeting, let's say, that used to be face to face, but now is done mostly over Zoom. And if it's still something that both parties want to investigate, want to kind of go through, we then go away and do some light level of due diligence. We need to know who they are, what they do, some of the finer details of that due diligence as well. And we've got a list of things that we ask them to supply to us that give us a bit more of a comfort factor. But as I said, a lot of these companies are EI clients already, and as such, EI, by the very nature of what they do, has done a large amount of due diligence already, and that gives a good amount of comfort to our investors as well. That they are within maybe a Leo or the EI kind of family, and as such have gone through a lot of the work that they will have done. So once we have agreed that yes, we'll put them on the platform, there are a number of elements that we then need to kind of get from them, and that of course is a video, which is like a pitch to the investors. So it's as if they are standing in front of a panel. They are giving a pitch and explaining what the company does, how it does it, and what they expect to have as a path to that eventual exit that everybody is wanting to achieve, obviously. So they produce a video, they produce a pitch deck, they produce the text that goes along with the video, that goes along with the campaign, and a few other elements as well that go onto the campaign. And once that is done, and we were all happy, and everyone's signed off on all of those elements, then it goes live onto the site, and we invite investors to have a look at those videos, look at the rest of the information that has come in the pack, and to decide whether they're going to invest or not. And it's entirely then their decision. And obviously, as the investments come in, that status bar creeps up and creeps up and creeps up, and hopefully reaches the target that they've set. And once that target is reached, then game on. The investment is done. We just need to then do the legal work behind it. And so once the campaign is closed, the legal work gets completed, and we've knitted together a very neat legal mechanism that kind of with our solicitors, who are Beecham's down on the Keys there, and with another company called Pierce Trust, who operate the nominee company. We've created this very, very neat legal mechanism by which to get the funding into the business. And it's only a single line on the cap table, so there'll just be one line on the cap table which says corrals all of the investments that have come in through the platform, and off they go with the money in their pocket, and that's it.
Fantastic. So that's a really interesting point there. So because I, as an entrepreneur, I don't want to have to deal with hundreds of small shareholders. So you have developed a nominee vehicle, and that is a single point under which all of those investors come in under this one line, which is a really good streamlined mechanism. Yeah, exactly.
I mean, in theory, there could be hundreds, thousands of investors that come in, and obviously you don't want to have to deal with each one of those. So yes, there is a nominee, and all of those investors sit in there. And as I said, it's just one line on the cap table, so it doesn't complicate it for any further rounds that you will potentially do with a VC or another private equity house or whatever it happens to be. So it's a very simple mechanism for that.
Very fantastic. I'm going to pick up a question that came in from Ian, and it kind of talks to where I want to go. But his question was around typically what level of pre-commitment investment is required to gain early traction in a crowdfunding campaign. And I'm going to split that in two, and I'm going to say, first one is there a requirement for pre-money or money already to be committed to start the crowdfunding? And then secondly, I'm going to ask you to explain, what do the entrepreneurs need to do to drive traction in a campaign?
Okay, so pre-commitments, we don't stipulate that there must be pre-commitments. So there we get, we continue along that front, and though we will, it's better if they do, but we don't stipulate that they must. So if they can show that they've got some interest from other parties, that's brilliant. And it shows interest that for our other investors, of course, that there are other people who are coming into this round. It's always very difficult for an investor, particularly who doesn't know the business up until the point that we've raised the campaign, that they'll be the first to invest. There's always a bit of kind of, listen, I'll just wait for somebody else to come in before I actually commit my funds. And of course, if everybody does that, then of course it doesn't move off the zero on the status bar. So we do like to see some pre-commitment. What level that should be? Well, I mean, it'd be great to start off at 50, but we know that that's sometimes unrealistic. So even a 10 or 20% kind of pre-commitment would be great. Having said that, we do offer an option where we can introduce to our investor club the campaign before it goes live as well. And we've done that a number of times where we've actually pre-secured full investment for a company before it actually goes live onto our site. One that we just recently did had 110% of the commitment already landed before the campaign went live. So we do have an option where we can actually put that through to our investor club, which is a subset of our main database, if you like. And these people get pre awareness of the campaign and can decide whether they want to invest at that stage as well.
Okay, good. I'll take a question from Kishitz, who just entered in there, and it says, is it possible to choose investors through crowdfunding? In other words, is there a pick and mix approach that you can adopt, or you take everyone who comes on?
In theory, you take everybody that comes along. They're putting in their money, but nevertheless, if there is an investor that potentially is maybe a competitor of yours, absolutely, we can say, listen, thanks very much, but no, we're not taking your money, and there's no problem with that. So no, I don't have any problem with that. And so yes, you can decide that you don't want to take some investment, and that's fine.
Okay, good. Note here from Susan. Hi, Susan. What are the characteristics of the investors, and how much do they typically invest?
Well, the average that we've had as an investment across all of our campaigns works out at about €2,500. But that doesn't tell the main story. There are lots, and our minimum investment is €100. So there are people who invest 100 and 200 and 300. But on the inverse of that, we've had many people who've invested tens of thousands, and in fact, our biggest single investment to date has been 200,000. Single investment of 200,000.
Wow.
So as you can see from that, there's a big spread as to where the money is coming in. But it's very frequent that we have 10,000, 20,000, 50,000. 80,000 come in as an investment as well. But as I say, the average is 2.5. So on the flip of that, of course, is there's lots of smaller investments too.
Very good.
Sorry, Conor, just to kind of go on to that, but the more people that you have in as an investor, the bigger the tribe that we call them, that are now have got skin in the game, if you like, and are there talking about your business, and maybe mention it over at a dinner party, or maybe mention it in the pub, that now they're investors in ABC Limited, and you should try their business. It's brilliant. You should use their product. So the bigger the tribe, the bigger the spread and the word going out to potential clients.
Very good. Question from Ivan. Who sets the equity? I presume that means the valuation. So how do you arrive at the valuation in terms of the investment? And then can the investor claim EIS tax relief as part of that?
With regards to EIS, most of the companies that we put on the platform are EIS, or self-assessed EIS. So yes, most investors can claim the money back from the taxman, and that's 40%, which is not insignificant as well, which really reduces the risk element to the investment as well. So if you're putting in 1,000, you're getting 400 quid back. So you're really only paying €600 for your €1,000 worth of investment. But on the valuation side, it's always a contentious element to this. The company sets the valuation. Having said that, if a company comes to us with a ridiculous valuation, we'll just say, listen, that we're not putting that in front of our investors. Thanks very much. So we do give it some sanity check. Having said that, but this is where the pre-investment comes in as well. If you can demonstrate that you've got, I don't know, 50 grand's worth of investment or 100 grand's worth of investment from other people who probably know the business, and you, more importantly, from previous business dealings, and have gone, okay, yes, I am putting 50 grand in or 100 grand in at that valuation, then that's a good indication that is, you know, there or thereabouts for the valuation. So if a company can come to us and saying, okay, I've got pre-commitments of 100,000 at this valuation, then, yeah, as long as it still makes sense to us, then we'll go with that. Having said that, if a company comes to us saying, listen, we've got no pre-commitments, but we reckon our valuation is, you know, I don't know, a ridiculous 10 million euros, then we'll say, listen, thanks very much, but no. If they're coming to us with a well-developed and some traction and more indication to us that the business is actually of you know, reasonable valuation, then we will go with that. So it does take some sanity checking, but nevertheless, it's something that we always have a little bit of a torrid time with, but nevertheless, we eventually find a position that we're all comfortable with.
Very good. And I suppose that's kind of the discussion that you're having with the entrepreneur. I mean, you know, this platform, if I were coming to you, I would certainly be taking your guidance in terms of what's going to work and what's not going to work. So I presume that's kind of in the discussions and the pre-meetings that take place before the platform, or before it goes live in the platform. Sean had an interesting question there. How do you make money? Does the platform take a percentage of funds raised? Do you take a fee, or how does that work?
Yeah, absolutely. We have to put bread on the table as well. So we take a 7% fee of the money that that goes through the platform. So and that's how that works. So yeah, so it's very. We only have one fee, and that's that. So there are. There's the payment mechanism. So we use Stripe, so those fees are passed straight on without any intervention as well, and they're to the company. But no, 7% is our only fee, and that's it. We don't take any shares in the business. We don't have skin in the game in so much that we have an exit payment as well. So once we've taken our 7% fee at the time of investment, then there's nothing else. And we also do we only have a no fault, no fee. So if you come onto our platform and don't raise any money, then we don't take any payment either. So that's how that works. So yes, no fault, no fee, and 7%.
Okay, good. And just go back to that point. So let's say I come onto the platform and I'm looking to raise 100K, and we watch the status bar and it creeps up to 90, and the time passes and I've only just got to the point of 90. I haven't hit the 100. What happens?
Well, the time is fairly broad, and we don't have to keep to exactly 30 days or 35 days. If we're at 90% and we'll just open it up for another week or fortnight even. We won't go to 3 months, 4 months. It's quite an intensive period of time where we're trying to. Well, we and the company are trying to promote the campaign and trying to direct people onto the platform to invest. So we won't spread it out for many months. But nevertheless, if it's close and we think that it's still got a good chance of getting across the line, then we'll keep it going for an extra week or two as the time stipulates.
Get it across the line.
Yeah.
If I could just go back, Hugh, to we have a very busy audience this morning. Could I go back to Hugh had a question around the EIS process, and I suppose it's the mechanics question. Who does the form filling? But you were kind of saying that the investors coming on are already pre-approved. Did I hear you say that?
The EIS is a little bit not tricky, but nevertheless needs to be considered. In the 2018 autumn budget, Paschal Donoghue stipulated that the revenue commissioners should move away from the approval process to a self-assessed process. So from January 19, companies could self-assess themselves because the approval process was taking far too long with with the revenue commissioners, and it was taking literally 6 and 9 months in some cases. So the self-assessed mechanism is where a company would probably take some advice from their accountant. Show them the regulations and the check boxes that need to be ticked for being self-assessed, and the accountant will go, yeah, well, we believe that that you rather the investee, the company seeking the investment, meets all the criteria that revenue have put out, and we think that you are self-assessed. We agree that you can be self-assessed. So the company will then come to us saying, okay, we are self-assessed as being EIS compliant, and they will raise money accordingly. So the investors who invest into the business at that stage are expecting, when they come to do their tax return the year later, that they will have the paperwork so that they can get their tax relief on their tax burden. So that's how it works. The company, once they've got that investment, will go back to revenue commissioners, request the EII-3 form from the revenue commissioners. They will be given out to the investors, and then they can claim their tax relief.
Very good, very good. Ronan, a question there around the exit mechanism for the Spark investors, and who is the investor of record on the cap sheet? Well, the investor of record, I presume, is the nominee vehicle that you mentioned. Exit mechanisms are in line with a typical exit coming as the company does an event, I guess.
Absolutely. Well, just going back to the nominee company. So the nominee company is the legal shareholder. However, there's a thing called, and this is a legal term, the beneficial shareholder are each of those investors that have put money in. So if you put €1,000 in, you're the beneficial shareholder of 1,000 shares if they're at €1 each. Sure. So you are again, as I say, it's a legal terminology that you are the beneficial owner, but the legal shareholder is the nominee company, and that is Pierce Trust. And Pierce Trust is a company that Davies and Goodbodies and most of the legal firms around the country have used at various stages throughout the year. They do this day in, day out. It's just part and parcel of the service that they do. So this is not a new thing that they've had to do this. There was a second part to that question, Conor. Sorry,
it was around the exit.
Oh yeah.
What do exit mechanisms look like? And I guess that's in line with unless there's any specific legals around it, but otherwise it's as the event happens, whether that's trade sale or acquisition or whatnot.
Absolutely. And there are normally three mechanisms. There'd be an IPO, possible, not common. Management buyout, again, possible but not common, or trade sale, which is the one that most people are aiming for, really. And that's how it works. So yes, so a trade sale where a larger company comes in, buys all the shares of the business, and everybody walks away with hopefully an increase in their return on their investment.
Good. James had a comment around if he arrives at a point in the discussion with you where it might be too early to create a campaign, he can come back to you at a later date. That's part of the normal discussion, I would have thought. Come in, kick it off. We're not ready. You're not ready. Let's park this, stay in touch. Like you would as part of any investor journey, I guess. There's a series of conversations going to happen between, for example, James and you and other investors over the next 12 months where you're dipping in and out and staying in. So I suppose the point is, staying in touch with you, Chris, and kind of letting you know, here's my update, here's where I'm at, here's what I'm thinking, if I'm correct on that.
Yeah, absolutely. And this happens day in, day out. A company will come to us, with a very good idea, but it still needs more development before we think that it's going to be good enough to go to an investment to in front of our investors. So yes, we'll have that discussion. We'll say, when you've kind of got to this stage of perhaps revenue into the business or clients onto the site or whatever it happens to be, then yes, absolutely come back to us and we'd be delighted to have a look at you at that point. But it happens all the time, and we're delighted to have those discussions early and explain to you what crowdfunding is, and hopefully you think that it's a good mechanism for your business, and we'd be delighted to help you once you reach those milestones.
Good. A question that was pre-submitted, I think it came in from Adele, and it's a kind of a very specific one, but maybe you could advise her. And she has a product she's developing around GDPR compliance software, and have you come across much of that? Is it of interest, and where might she go with something like that?
Yeah, absolutely. I mean, we will have a look at any business, yeah, and whether it's in GDPR or any other kind of SaaS model or yeah, whatever. I mean, we're very, as I said earlier on, we're very agnostic to it. As long as we can see that there is an avenue for our investors to invest, and ultimately an exit for you as well, and therefore our investors as well. Yeah, we'll consider it. If it's a very much a kind of a cottage industry that you're going to work at for the next 20 years, that's probably not going to be a business that we will want to put to our investors, because our investors are looking at a time horizon of somewhere between 3 and 5 and possibly even 7 years for an exit, an occurrence. They don't want to put their money into a business and see it sitting there still 20 years later. So they need to see that that the business has certainly a possibility and even a probability that there will be an exit, within that time window. So yes, that's how we assess the businesses, and that's how we will kind of direct you as an investee to whether you're suitable or not.
And maybe just if I could just follow on from that, it's another kind of specific one from Carmen, and it was around, do your investors care about kind of sustainability or environment investing, which, as we know, is kind of an emerging trend we're seeing coming through now. Are you seeing much of an interest from your investors on the platform?
Absolutely. We've polled an awful lot of, well, in fact, most of our investors at this stage kind of as to what they want to invest in, what type of industries, what type of businesses. And ESG is one of those elements. So environmental sustainability and corporate governance is becoming a very much an element that they want to invest in. I wouldn't say that it's the primary reason for investing. These investors are fairly pragmatic, and they want to see a return on their investment. They have money in their bank. They want to see it, being utilised in high growth, young Irish companies, and that's what we facilitate. If there's an ESG element to it, happy days, and that will go to ticking in one more of their boxes that they have as a criteria before they decide to invest. But yeah, absolutely, and we want to see more of those businesses as well.
Fantastic. A question here from Asad. Hi, Asad. He's the head of operations for the Irish Student Entrepreneurship. And there's a multi-stage competition with a prize. And his query then is, I suppose it's around if you've got student entrepreneurs who are at an early stage, and then there's crowdfunding and there's obviously other VCs. Are you open to those sort of connections, whether that be, advice to the young entrepreneur or whether it's actually getting into investing? How might Asad link up with, say, you, for example? We're happy to connect with you, Asad, and from a Dublin BIC perspective, we can offer you connections across the ecosystem. So follow back with us and drop Donna a note, and she'd be happy to chat with you on that. And I presume the same for you, Chris. You're open to, there's this kind of perception that it's hard to get to VCs and funders and investors, when in fact, as I know you and all the others, everyone's open to the coffee and the conversation and the chat. Am I correct on that?
Very much so. Yes, and Asad, I'd love to hear from you if you'd want to get in touch, and I'm sure Conor can facilitate that for you. We actually do quite a bit with young entrepreneurs as it is already. We have a program that we run with Trinity, one of the, in both two streams actually. One is in the Masters for the entrepreneurship, and another one is in one of the other undergraduate courses that they do, where we actually run a crowdfunding campaign for them. So there'll be, let's say there's 100 people in this particular class. They all break off into 20 groups, let's say of five in each group, and they create a crowdfunding campaign. So they create they create a video, they create the pitch deck, they create the wording that goes onto the platform, and we actually in a subsection of our own platform that is private, we create all of these 20 campaigns, and they vote on them themselves, and the leader wins not very much actually, but the accolade of being the winning entry, and we've followed that through as well. So there are companies who did this as an undergraduate project who are now actually, making a company out of this and want to invest with us as well. So we are doing that, and it's live at this moment. We've got a couple of companies that are talking to us who have gone through that process and want to do it properly with us now. So happy to do that with you, Asad.
Superb. Conor had a question. What happens in the event that a company is oversubscribed in excess of its target? How does that play out?
So this is again another common question. So if they're seeking 100,000 and they let's just say that they get 200% over, they get 200,000 in, they will give more equity away than they would have done if they. So they almost, it's not quite double, because there's a calculation that has to be done, which includes post-money and pre-money valuation. But nevertheless, it's as good as, damn it, double the amount of equity away. So if they were giving 10% away for 100,000, they'll be giving almost 20% away for 200,000 worth of investment. But the companies don't have to take it all. If they hit the ball out the park and they get 200,000, they can dilute everybody down, let's say by 50%. So if I, as an investor, put in 10,000 into that, you would only ask me to actually pay up 5,000. So, and then that way you keep all of the people all of the investors in the campaign, and they are then out spreading the news, and they're all still got skin in the game, and they're members of that tribe that I spoke about earlier.
And so you dilute the investment that you're asking for. You don't go back and try to renegotiate the valuation.
We never renegotiate the valuation. The valuation is the valuation, and that's fixed. So the investors, when they invest, they invest at that valuation, and that's a non-movable element of what we do here. If they get 200,000, they have to then give, therefore, more equity away. But the company might not want to give all of that equity away, and that's their prerogative as well. So if they still only want to give 10% away, they have to dilute everybody and only take the 100,000. Or cut it off and say, okay, everybody up to this point we'll take. Everybody after that point, sorry, no, we won't take your money. But that's the company's decision. Very clear,
very clear. Question from Miriam there. What does success look like in terms of the campaigns that go up on the platform? Do you do a due diligence so that once they go on the platform it's pretty much guaranteed, or is there a kind of a 2 in 10 that don't make it, or what does that look like?
If the campaign reaches its investment target, then and we haven't had this happen, but all of those will go through to actual full investment, and that then is a success with regards to that campaign. So or if you reach your target, the due diligence has been done by us initially, by Enterprise Ireland probably if they're an EI client, and by the individual investors, as the campaign has gone through as well, because we do advocate that all of the investors should do their own due diligence on the business as well. They need to look under the bonnet of the business, and particularly if they're putting in large chunks of money. If you're putting in a couple of £100, you're not going to spend days poring over the books. But nevertheless, if you're putting in multiple tens of thousands, yes, you probably will, and you'll want to kind of make sure that your investment is going into a company that you think is going to do well. So yes, if you reach a target, then we've had 100% completion rate from that point, and we've not had any that have failed to actually go through their legal work and therefore funding in the business.
Very good. And a follow-on question from Miriam: would you consider making your platform available for friends, family, fools of a founder? If we have people backing us, would you do your magic on a closed group basis to set it up, or do you just invite them to come onto the platform?
We will do that, actually, and that's something that we're pushing out as well at the moment. So we have, as I've mentioned, a very neat legal mechanism by which we can kind of corral numbers of investors into one group. The legal elements from our side is now kind of very much tried and tested, and it's very simple. So yes, if you're looking for, let's say, 100,000, and you've got 100,000, and you don't want to go public, or you think you'd rather just kind of do it privately, yeah, absolutely, we can easily corral all of those investors into one simple mechanism, and you don't even need to produce a video or all of the other collateral that we'd otherwise need to do. We can facilitate the legal arrangements to pull all of those investors together. Yes.
Excellent. Great question, Miriam. Thanks. From Esther, which is a good question, and it's around the collateral. So, how long should the video pitch be, and what's the content inside in that? Is it product, entrepreneur, finances? What are you looking for in that video?
The video is the pitch that you would give to in front of Enterprise Ireland if you're giving it to them, or to a VC. It's as if you are trying to sell your business to the investor. You're not selling your product, although you're obviously telling them what your product is. You're not telling them that they should buy this product. You're telling them that they should invest in this business. So the period that we've found is quite a nice kind of time is about 3.5 minutes of a pitch. Any time after that, people are getting a bit bored. They might switch off, and we certainly don't want that to happen. So that we found out that 3.5 minutes is about the right time. And in that, you're telling them about the team, the product, the reasons why they should invest, the expectations, the goals that you have for the business, what the market size is. All of the usual things that you'd put in a business plan, but crammed into 3.5 minutes that you can kind of quickly give a snippet of to that investor. And because the video is the first thing that the investor sees. If they like the video and what they hear in the video, they'll then go on to read the pitch deck. If they like the pitch deck, then they'll go on to read the rest of the collateral that's on the site. So that's your 3.5 minutes of that video is to really grab the investor by the lapel and say, listen, invest in me. And that's what you need to get across in that time.
Fantastic. Sean had a question here. It's a great question, actually, and it probably talks to the first question that came in much earlier on from Susan, and it's around the at what stage do your investors invest? And Sean's specific question was around, he's targeting FTSE 100, Fortune 500 companies. How much does the letter of understanding, the expression of interest from big companies, how much does that matter? He's at post MVP, raising to build a product. Susan earlier on was saying, at what stage can I come onto the platform? So maybe, are you taking pre-revenue? Are you taking pre-product? Are you taking, maybe just dig a little bit into that for us, Chris.
Yeah, sure. We've funded both pre-revenue and post-revenue companies, and happy to do so. There've been some excellent. In fact, just the last two that the last two that we funded, Frequency and Halo SOS, both for pre-revenue, both at MVP, but nevertheless, we introduced it to our investors, and they loved it, and it was there was investment coming into it very early on. Obviously, a letter of understanding, letter of intent is just another brick in the wall to persuade the investor that this is something that we've got some traction with. We might not have sales, but nevertheless, we've got a letter of understanding that they will buy, and that obviously is another feather in your cap that you can wave in front of people to say, okay, listen, this is a serious product, and we have. Even though we haven't got traction in money in the bank, but we've got traction in so much that we've got a pre-commitment, if you like, from clients.
Good. Your investors, I don't know, do you disclose the number or the size of the pool but I presume you're constantly on the hunt for new investors as well as investees onto the platform. You're looking to develop, the different classes of investor. Am I correct in that?
Yeah, absolutely. Yeah, we're always on the hunt for more investors. Of course, the more investors that we have, the bigger chance that we've got of successfully completing a round. And yeah, we've got tens of thousands, but multiple thousands of investors on our books now. Most of whom are Irish. About 82% of them are here in Ireland. Another 10% are in the UK, but probably have some connection to Ireland. And then the other 8% are dotted around the world, and again, probably have some connection to one of the campaigns that we've run beforehand, or as I say, a connection back home. So that's who we have on the platform. We're always looking for more, and always happy to talk to investors as well.
Good. A question from Neha, which is a kind of an interesting question, and I'll widen it out a bit. He's developing tree-free sustainable paper, which sounds like a fantastic product. But his question is, what kind of a product do investors not invest in? And maybe widen that out. Are there products or sectors that the platform won't look at, Chris?
Well, we don't look at property, and so that's one thing that we don't do. That really is suited really more to debt rather than equity. But no, otherwise we're open to listen to anything. As I say, we're very agnostic, and our investors have said that they're also agnostic with regards to the sector. So no, we as long as the business stacks up itself, happy to look at it. So we're open to all comers.
Okay, good. Let me just, I'm conscious of time. We're coming up on 15:15. I might go for a few minutes because we've had a lot of interest and a lot of engagement. So I'll keep it going for a few minutes. Talk about what your view of the kind of investment market over the next 6, 9, 12 months is, Chris. We're kind of hearing a lot. We're in the middle of this kind of crisis. We're in the middle of pandemic times. Deals are slowing down. Valuations are changing. What's your view? What are you seeing both now, and what are you seeing? What do you think you'll see over the next 6, 9 months?
Well, of course, we're in uncharted waters here, and things are bad for a number of sectors, in particular the hospitality, which which is common to which everybody knows about, I'm sure. But in the last 6 months, we've been really very busy and very buoyed by all of the things that have been going on our platform, at least anyway. We've had a massive increase in our investor numbers over that period, 75% up on last year. We've had more companies come to seek investment from us, and we're ploughing through all of those at the moment, and we're trying to get them onto our platform as quickly as we can. We do a lot of work on the background before a campaign comes on site, and we'd probably we're very selective with the number of with the type of businesses, and not type of businesses, that's wrong, with the quality of the businesses that come onto the site. So we're very selective, and which kind of is a comfort factor for our investors as well. But no, we think that there's an awful lot of money being not spent at the moment in Irish businesses. There's over 118 billion euros sitting on deposit in Irish bank accounts, and those people who've got that money, they want to put it somewhere. They're getting zero interest on that money in those places. We know that the venture capitalists have not shut their doors as such, but they're certainly kind of circling the wagons to look after their own portfolio at the moment, because they know that there's probably going to be a money call on some of those businesses, so they're not investing in new businesses at the moment. So we've had a spike of kind of people come to us, which is great. We've got more investors on than we've ever had, and we've got a pent-up demand there as well. So and we know that also kind of businesses really in a downturn and in a recession, they are perhaps forced their hand to kind of to open up that business. But nevertheless, I think that there'll still be a very good ceiling for investment to go into those. And knowing that we're going to come out of this, it might not be for another year or 18 months or 2 years, I don't know, and nobody knows. But nevertheless, I think that there's plenty of investment opportunities out there for the right business.
Okay. Excellent. You're open for business. Can we send out your details? Can we ask people to connect with you?
Absolutely, please do. So the platform is sparkcrowdfunding.com. I'm Chris at sparkcrowdfunding.com if you want to get in touch with me, and I'd be delighted to hear from you. And whether you're an investor, whether you're a startup, get in touch, and we can take you through the process. And if you're ready to go onto the site, we'd love to speak to you.
Can I say thank you to Chris for giving up his time with us. It's been a hugely informative session, Chris. Thanks so much indeed. I think I'm just seeing the comments coming in there. For anyone who is considering it, please do contact Chris. If you want to have a discussion around entrepreneurship in general, come back to Dublin BIC, follow back with Donna, and she'd be happy to kind of have a chat with you about how Dublin BIC can help you on the journey. And once again, thanks to everyone for coming on.